Welcome to this episode of PhillipCapital's Market Watch. I am Zane Aw, Research Analyst from Phillip Securities Research. Today, I will be sharing insights on market trends during the US presidential election year and the impact on the markets under different scenarios. Let's dive right in. Let's begin by examining the monthly seasonality performance of the S&P 500 during US presidential election years, starting from 1928, when the index was first established. Election years typically see a high likelihood of monthly returns being positive, with over a 50% probability for all months except January. The index is most likely to see gains during the summer months, with over 70% probability of gains in May, June, and August. December has the highest probability of being a positive month at 83%. In terms of returns, the summer months provide strong returns, with July and August at 2% and 3% respectively. Following the conclusion of the elections, November and December also show strong seasonal performance at 1.1% and 1.5% respectively. In 2024, we have observed a stronger than average market performance during the election year, particularly during the strong summer seasonal period. Next up, let's explore the S&P 500's average returns in presidential election years. On average, the S&P 500 is up over 7% with a 75% probability of gains. However, this figure decreases when a Democrat president is elected, averaging 4% return and 60% probability of positive returns. In contrast, the S&P 500 usually performs well above average when a Republican president is elected, averaging 11% gains with a 90% probability. Earlier sections showed that markets usually react positively soon after an election, particularly when Republicans win due to their business-friendly policies. Yet, looking at the situation a year later, we often see smaller gains, indicating that the initial excitement may settle down as the actual effects of these policies unfold. This demonstrates how short-term enthusiasm can differ from long-term results in governance. With this in mind, let's take a look at the S&P 500's average returns spanning 3 months prior to a year after election day. In the 3 months and 1 month prior to election day, the S&P 500 sees higher returns with 2.6% and 1.5% returns respectively when a Republican president is elected, compared to the average 1% in all years and 0.3% when the Democrat president is elected. On election day, the index is relatively flat. However, post-election day sees the S&P 500 outperform when the Democrat president is elected, particularly as the timeframe extends to 6 and 12 months. After half a year, the S&P 500 typically sees over 6% returns when the Democrat president is elected, compared to 5% in all years and 3% when a Republican president is elected. A year after elections, the S&P 500 is up over 12% on average when a Democrat president is elected, as opposed to 7% in all years and only 0.7% when a Republican president is elected. Last but not least, let's examine how the S&P 500 performs under unified versus divided government scenarios post-election. In the US, a divided government occurs when one party controls the White House or executive branch, while another party controls one or both houses of the United States Congress or legislative branch. On the other hand, a unified government is a political situation in which the same political party controls the executive branch and both chambers of the legislative branch. We can see that on average, the S&P 500 generates greater returns during a divided government than a unified government at various intervals post-election day, at 1 month, 3 months, 6 months, and 12 months respectively. This could be because political gridlock might preserve the status quo, potentially easing market fears as major legislative changes are less likely, thus reducing uncertainty and bolstering investor confidence. That's all for these episodes of PhillipCapital's Market Watch. I hope the insights shared today will be beneficial for your investment journey. Do remember to like and follow us on our social media handles and subscribe to us on YouTube. Thanks for joining us and see you soon.